Morning, everybody. It is 8:10 a.m., July 11th. Of course, this market never ceases to amaze. It's pretty crazy. Okay. So we had 2 days in a row, right, where the NASDAQ sold off. Now, I'm not, one day you rose, right? You rose and then you fell. Yesterday, you basically did what's called an open test drive. You opened, you went up a little bit, you tested it, and then you drove lower, right? Right into a key level that I've been talking about, right? That was the bottom. But the Nasdaq was relatively weak yesterday, and you can see the ES, the SPY, the S&P 500 was relatively strong. Okay, at one point, literally, Nasdaq was at the lows, in the ES or SPY was at the like close to the highs. Pretty disconnected. I'll show you in a sec what the internals were showing me. Okay, so now yesterday I don't talk about this a ton because we concentrate on the major indexes, but I always have mark up my charts every weekend for stocks. Okay, I'm always aware of the gamma levels. I'm always aware of the daily charts of stocks. And sometimes when I don't like the indexes, like yesterday, when there's that big of a disconnect, it's kind of like either is the Nasdaq going to bring down the ES with it, or is the Nasdaq going to bottom and the ES is going to bring up the Nasdaq with it? And that becomes very difficult to navigate sometimes, right? It could cause weird price action. So I noticed a lot of days when I don't like the indexes and I just maybe went to a stock because I always have stocks that I like to see at levels. And some days I realizing and I say, well, today would have been a great day to trade that stock instead of looking at the indexes, right? Because the stock can kind of have its own day as opposed to just the overall markets, right? So that's what I did yesterday. All right, I had a couple stocks coming into pre-market that I wanted to go long. All right, number one was Tesla at the level of 300. Okay, now, like I said, I don't want to get long-winded in this. I just want to explain why, you know, with gamma levels and all this daily charts and stuff like that I analyze, I have the tools in order to trade stocks because I'm well aware of what they're doing. So we'll look at it really quickly. All right. So like Tesla, I can show you here. Let me see. I can just show you really quickly. I'm just going to show you real quick why I choose the levels I do. Okay. Hopefully this makes sense to everybody. I'm going to go off the regular. Give me one sec here. Boom. All right. So here's Tesla. Right. Pre-market. I was like, oh, I'd love a pullback. Look at this level here. It was so perfect. Right. This is a 15-minute chart. But I was like, I want long of Tesla. Well, the Tesla opened up and literally just drove off this 300. And I was like, oh, look at that hit. The previous day's highs, this big gamma level. All right. That's why I liked Tesla. But it was out of the question, right? It drove up and I had no chance. There wasn't really a pullback. And see how it just moved up and it consolidated, right? So that was kind of out. The next one I was looking at was Meta. Now, Meta, right? I was looking at, I'm like, ooh, I would like a pullback to 725 or to, yes, the previous day's lows. That just got weak, so I didn't choose Meta, right? And the other one I was looking at was Microsoft at 500 level. 500 level is a big gamma level, so, and it was yesterday's lows, but that just got weak and didn't do much, right? So then I settled at Google. Why Google? Well, this is the power of gamma levels, okay? So see this white line? That, from my script, that I run every morning is a gamma flip point, the weekly gamma flip point. And I just want to show you how much action revolves around this pivot level. So there's resistance, resistance, right? And then it came up. And this is the one day I wanted to get long in Google, the day before. I was like, ooh, I'd love a pullback. Look at that. Honored it and ripped up. And look, this was news news that came out for OpenAI coming out with its own search engine. But then look, it held 75, 175 again. So then this opened, and I wanted you to notice this price action here. When I was looking at all the stocks, Microsoft was dropping like a rock. Meta was dropping like a rock. Look what Google was doing. It was holding, 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 holding 175. Now 175, this signifies negative gamma below this level. But it also is the largest negative gamma strike in this week. So what that means is market makers and dealers, below this level they have to short, above it they have to go long. So it's a big level, and you notice it was just holding and holding. And I went long here at 175, and then you got this rip up and held, and it just really just moved up for the rest of the day, and then it consolidated, right? I got out around here on my last scale out, and I got stopped around here, right there. I got stopped because I was hoping it would push higher, but it didn't. It was like 165% winner, 1.65 R. I scaled out on multiple pushes up. Okay, if I held it, obviously that would have been a monster. That would have been about almost $3, and I only had like I think here I had 175. Yeah, I only had about 60 cents risk, and it went up $3 or $3.43 about. All right, so great trade. I'm going to start doing that more often because I read these things constantly, and why not just take advantage of that when I don't like what the market's doing, right? Because then this is free. When this was happening, Nasdaq was all wacky, and this was just trending up, and there's other levels I put in my Discord why I took them, all right? So that being said, just wanted to share that on my insight. It's not, I'm just not a futures index guy. Okay. Those all come into my decisions on trading as well. All right. Hopefully, that made sense. I went into detail on my Discord. Very detail, okay? So I know I'm going off course a little bit today, but my Discord's Confluence Trading, okay? And I shared with everybody in my Discord, okay, why I took that trade in pretty good detail, okay? Right here. I'm just pointing out, see, this is when it was making its move. I set the gamma level. This is the daily chart. It had, right here, had the 200 moving average double support here. You had the 20-day simple moving average support. You had the expected move of the week of the lows was right here, and last week's lows. It was like, and then, because I'm the king of the most traded prices in VPOX, okay, I want to show you this real quick. Notice this most traded price of the month is 176 around 130, right? The price was right here, okay? Also, there's a 90-day profile. Look at that price. It was right there at 176 as well, 175, 176, right? So that's a big high volume node, right? So I knew there was a lot of, that was the most traded price of the last 90 days, okay? And I want to show you guys what I said here. So this 176 price in Google is stalling as expected. It's the VPOC month and the last 90 days VPOC. If price can find acceptance above this level, Google should go up to 180. Okay? Just because that's how the market works, right? And then eventually, price moved past it, right? So that's the reason Google had that nice push up. All right? I'm showing Google's relative strength for the day. And it was really pushing here, took out this large selling volume. So I was showing you the details. Okay? Like I said, I really needed to really use all my tools that I have every day, because Sometimes I get wrapped into the internals and the indexes, and I'm like, oh my God, like that could have been a long or a short in a stock or something where the move was much better. And believe it is true, you get better moves in stocks. You do. Like Tesla yesterday, when it pulled back, I mean, you get bigger moves percentage wise in stocks than you do in the index. Okay? So, sorry for that soliloquy. All right. Now we get into indexes. All right. Hopefully, hopefully you got something out of what I just showed you. Hopefully you did. Right. And again, I have a script that I run for my gamma levels every day. Like I said, I want people to join my community. If I get some people joining the community, subscribing, asking for the indicator, I will share that gamma level indicator, and you just paint it all the levels on your screen. Okay. So I can share that, right? I run the script every day. So, and it's beautiful because those gamma levels are very key, right? That's how the market moves. All right, without further ado, let's get into this. Welcome to my channel. My name is Steven Gonzalez. I use market profile, volume profile to find structure in the markets. Along supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That's how I come up with game plans and strategies, okay? I also use Anchor VWAPs. All right, that's a very important tool. And of course, my number one, the market internals. That lets me know the guts of the market, what's going on under the hood of the market. All right. Now we're just going to get right into futures. All right. A couple notables here. Bitcoin's at all made all-time highs, up at 118. That's a monster. All right. That's a monster. Side note here. A long time ago, I used to bet on fights, and Bitcoin wasn't an asset really to invest in as much back then. And I transferred some decent money into sports betting account. And I actually own Bitcoin, I think at like 6,000. But I didn't look at it as an asset, it was just currency. Jeez, but I've been loving that right now. That would have been huge. All right. So look what's happening right now. We have a VIX up 6.53%. We're at a 16.8 VIX. Ethereum up 6%. Bitcoin's up 4%. Silver, I'm a holder of silver. I'm loving it. It just broke out of a consolidation, up 2.85%. Crude's up 1.16%. Gold up 1%. 10-year yields up almost a percent. The dollar's up 0.18. Okay. Nasdaq's down 0.52. 30-year bonds being sold down 0.52. ES down 0.58. Dow's down 0.63. And the Russell is the weakest, down 0.89. All right, moving on to the Max 7 Plus here. We got Coinbase. That's the Bitcoin proxy. Not as up as much because the market is down. Okay. And it's followed by Amazon. Amazon got some some upgrades. So, had just had its Prime Day, but didn't do so good. But it just got a bunch of price target and upgrades. Netflix is flat. Then we got all laggards here. Okay, we got a bunch of laggards. Let's go into the 50 percenters. So you can even see I have Google check mark from the previous day. I'm going to take that off now. Okay. So 50 percenters. You have Google down 0.51, AMD down 0.53, Nvidia down 0.60, Broadcom down 0.66, and Apple is the laggard. Apple is down 0.72. Okay. Top sectors. Is there anything to note? Not really. So we'll just go into sectors. All right. Sectors here. Driving today is flat. Is all defensive kind of. Is your healthcare, staples, real estate, utilities. So all the safety stocks, and then you have technology, which is the largest weighted, is down 0.60. Basic materials down 0.64. And semis is your laggard. That's usually a risk off. Okay, risk off. But we're bouncing off key levels here in the market. So, and also China and U.S. did something good. You also have the Trump putting 35% tariffs on Canada. This is what's bringing the market down. This market's been very wild, right? So that's what's going on there. Now, we're going to move on to, there's not much on this economic calendar today at all. Okay, not much at all. All we have is a WASDA report. It doesn't really move markets. There's nothing here to talk about. All right, let's move on here. Now we know we got the Trump's tariffs. Nvidia hits 4 trillion market cap. Let me just see if there's any stock updates here. Here we go. All right, so Nvidia stock fell 0.6, retreating after the AA Darn closed at a record level on Thursday with a market capitalization of more than 4 trillion. Levi Strauss stock rose 6.1 after the iconic jeans manufacturer raised its sales guidance. What else here? Coinbase stock rose 1.2 with the cryptocurrency exchange benefiting from the rise in Bitcoin. All right, Oscar Health stock fell 2.5. Wells Fargo downgraded its stance on the health insurer to underweight from equal weight. All right, let's move on. Let's look at if there's any upgrades. This was not updated the last time I looked at it. Now it is. Upgrades, Boyd Gaming. Okay, FCX, Freeport McMoran. I believe that's copper. Let's see here, because copper is going to have tariffs. Interesting. Oh, this is downgrades. I'm sorry, this is downgrades. Let's go to upgrades first. AMC, upgrade. All right. Usually stocks move on these, so that's why it's important to look at these. Texas Instruments. All right. Downgrades. Boyd Gaming, FCX, Oscar Health. We already know about that. All right. Price target. Let's just go into there because I think that's where Amazon is. Because I did see Amazon. I don't know why it's not in here. Netflix target raise. That's why Netflix is not down that much. Let's see here. All right. I can show you in a little bit. Here's some more news. Trump puts 35% in tariffs. Canada tariffs. Let's see. I'm not going to repeat anything. It looks like Google did discount cloud computing for U.S. government. Like I said, I'm only going to mention big stuff. So it looks like the Nike, the company, said in an internal memo seen by Reuters on Thursday that Jarrett Carver, president and CEO of Converse, would step down and be succeeded by longtime company executive Aaron Kane. Okay. Tesla, the automaker, will open its first India showroom in Mumbai next week. Have imported 1 million worth of cars and merchandise. Here's the Amazon. See, here it is. Amazon, Piper Sandler raised the target price to 250 from 212. There is what I was looking for. And look, Piper Sandler raised the target price to Netflix. That's why those two are moving. That's why for stocks, look, very important to look at upgrades, target raises, because look, Amazon and Netflix are not down. Okay, it's very important to look at. Moving on. I think we can move on to. I think we go with daily charts now. All right, let's get to the daily charts. Now remember what I was talking about yesterday, right? Welcome, Mango. How are the markets looking today? Wild, wild. But what I like right now, we're at key levels. I'm gonna talk about that in a sec. All right, so let's look at SPY. All right, because there's a lot of wild stuff going on, but you got to look at it in the big picture, right? You got to zoom out and look at the big picture. That's what we're going to do here. So here's your SPY. Okay, here's SPY. Okay. Remember yesterday I was like, we're just in a range, right? Well, look what happened yesterday. Remember the orange levels on my charts are last week's range. We're still inside last week. We tried to break out of last week's range and we got rejected. Closed here, right? Closed here. Remember what I said yesterday? I said, look, guys, we look like we're just in a range here. Now look, we tried to go outside that range and we got rejected back into range. Okay? That's how you have to look at it. You can't look at every little price, okay? Because it will throw you off. Now, look, we close at 625.82. We are at 622 right now. We are right here. Right here. We're gapping down. All right, we're below the lows. We're still in the balance range. This is last month's highs. The white lines on my chart like this are last month's levels. So the key, I call this the express chart because I have last week's range in orange, last month's range in white, and then my expected moves are to the bottom here in red and to the top in green. Okay. Now expected moves are based on options volatility, and expected moves are right around 70% of the time. They close within those ranges. 70% of the time. All right. It's important to have those on your charts. All right, now let's look at futures. I am working on a script as well in Python for expected moves to be a little more accurate. So, like I said, come to my community and I'll share some of the things that I'm creating and share them, okay? Now, let's look at the ES futures. Look at this range. Remember what I just said, right? Remember what I just said. Here's the range. That's looking like balance to me. Okay, and it's honoring this support, right? Look. Again, this is futures. Last week's range. Inside last week's range. We're in the middle right now of last week's range. Nothing to see here. Nothing to see here. Okay? Keep it in context. Keep it in context. When I first started trading or looking at stuff, every red candle was like, oh my God. Every green candle, oh my God. And you got to step back, right? Look at the Qs. What do we do in the Qs? Came up to last week's high. Look, the day before, you broke through last week's range, failed. Yesterday, hit last week's highs, failed. Okay? And what did you hold? Last month's highs. Last month's highs. Okay, this is the Qs, okay? We're just in a range, that's all. Now, 552.90, that's where we're at, 552.90. That means we're right here. We're at the lows of yesterday in the Qs. Okay, let's look at futures. Look at that range. Look at this range. I mean, tell me we're doing something here. It almost goes back to here with the Qs. There's your range in futures. That is balance, folks. Look at last week's highs, lows. Well, prices right here. We're almost in the middle of last week's range. I keep repeating this. Now, you did hit the 9 EMA daily right here in futures. You did finally hit that, and you're getting some buying, right? All right. That is what we're looking at there. Let's look at that triple-headed monster now. Possibly, yeah. That's right, Mango. Let's look at triple-headed monster here. And that's your bond market. That's your dollar. They're doing a whole lot of nothing. This 10-year yield is just moving sideways. It goes down, it goes up, it just keeps not knowing what to do. It's very important to look at, but it's not really telling us much right now. Okay, let's look at that dollar. Dollar's bouncing here right off these lows. Have to see it's in this channel, so really have to keep an eye on that. Let's go to VIX. VIX is 30 days out of fear. 30 days out of fear. 30 days out of hedging. Let's look at this VIX. We're holding this level. Look, we hit the expected move of this week in the VIX, and we bounced off of it. And now we're back up to 16.85. Obviously, if this goes up, bigger ranges, more volatility. All right. Now, I keep getting alerts. Okay. I'm going to talk about this very briefly. The put to call ratio. That's ticker $ P call. I have alerts set. Okay. Whenever you get in extreme, right, like down here, that just means nobody's buying puts. And I keep getting alerts, okay? Notice how low these are getting. People are not buying protection, all right? And generally, that's a little data for me to say, okay, we're getting frothy. We're getting a little frothy. Okay, now if puts are being really bought, like up here, and I want you to notice something. This high here, that's puts up all the way at 1.37. That's an extreme reading. Guess what happened? That was April 4th. April 7th was the bottom of the market. So you use that. If there's so much puts, I have alerts set to say, whoop, we're getting really overextended here. That right there was your puts on April 4th. April 7th was the bottom of the market. Okay? All right. Moving on. Let's go to the market internals. Recap. All right. My bread and butter. Let's look at that together and see the big, big, big divergence. Okay. Now, here's all your stocks, or sectors from the open and their weights, right? Look at these, and then this indicator puts all of that easy to look. So this is your day, right? You started off, market cap was getting weak thanks to all the tech weakness, right? But look at that equal weight, just rose real high, and that just means the overall market is strong. But these bars, there's a lot of space. That's a divergence. That was because the NASDAQ was weak. But overall, the market, that's why it recovered. And you can see here, remember I was talking about gamma levels? Look at the SPX. Came right down to yesterday's flip point in gamma, and that was support. Right here. Okay? Right here. I went long Google, but right here could have been your long. That's why the gamma levels are very, very important. Okay? All right. Let's move on. Look at the hourly charts real quick. And I know I took some of your time in the beginning explaining Google and stuff like that. I apologize for that. Hopefully, though, you enjoyed that. All right, here's our hourly charts. And we'll just look at some levels here. All right, so important here. Pretty easy to look at here. Remember I said we're in a range. This is just zooming in a little more. So Mango, you still there, right? So let's talk about these levels here. All right, pretty easy to see, right? And yes, this is last week's highs. Remember, they're in orange, so it's automatically on my chart, right? So yesterday that was the highs, and then in the overnight session, the graded area, we fell, right? Now, that was probably when he mentioned Canada tariffs, right? Trump. And what did we do? Here's your monster level, 62.70. This right here. This is your defense for bulls. Okay? This is your defense. So look, we came down here into this demand zone. We got caught a little bit. This is your month-to-date anchored VWAP. Okay? But this 62.70 is the level to write down. Okay? It's very important. As long as you stay above this, my bias is going to be bullish. Okay? Now, I understand Canada tariffs took this market down, but believe it or not, this tariff stuff is starting to get, the market's starting to get a little more numb to it. All right? And this where here is a price in. You're pricing it in. Okay? You got to understand that. Market's a discounting mechanism. Okay? Now, what I did here on this big bar, I put an anchored VWAP right here. This tells me sellers are still in control below this line. That's how you use anchored VWAPs. Anchor it from a scene of the crime here, and see if sellers are still in control. Below this level, sellers are in control. Now look what we hit, month-to-date anchored VWAP. That's from the beginning of the month. So that's how I use anchored VWAPs. All right, so just remember 62.70, and we're in this range. Look, boop, 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 boop. That's all you got to see. Now, Mango, what I was saying was, yes, big demand zone, 62.70 showing support. If you catch a bid and you start working, you're going to probably work yourself up to here. Okay? Moving on. NASDAQ. Same thing. Okay, same thing. Monster level, the number one is your 229. Now, guess what? We're right there right now. This is the most traded price of the week. Okay, inside here. Now, the monster, okay, is 22830 in the NASDAQ. This spans all the way back here. That's the most traded price of the last month. Okay, I'll call it a VPOC month. Okay, this is the VPOC week. Inside here is a chop zone. You don't want to be caught in there. Okay, if the NASDAQ reclaims this level, holds it, we could go and test where last week's highs, the orange, right? That's the range we're in. Look, see, come down, boom, hold that level. Push up to last week's highs. Boop. Push back up, fail, go back to that level, go up, fail, hit this monster level, come up, right? Just get the point, right? So 229, you want to reclaim that level, okay? 22830 is your last defense, okay? That's your bull bear line in the NASDAQ. Under that is poor structure. Under that is poor structure. And that's where I introduce my boy here, the elephant on the toothpick, okay? Elephant on the toothpick. Why is that? Because this elephant is the range. This price action is holding up that elephant, which is the toothpick. This volume here is very thin, and you have single prints, which is emotional buying. Okay, if that toothpick is supportive, it's bullish. If the market gets weak, breaks that, this can just cut through that like a hot knife through butter. It's like a house that has poor foundation. Okay. All right. Moving on. Let's go into our futures analysis here, and I'm getting long-winded, so I feel like I'm giving nuggets, golden nuggets here. All right, this is your market profile, volume profile. Right, this is where we come up with game plans. All right, where we come up with game plans. So first thing I'm going to do is we're going to look at what's going on here. All right. Now, first thing, we're going to look at that weekly profile, right? Composite volume profile. You got some excess here. Then we have a high volume node, which is your most traded price of the week and the month. That's ultimate balance. Okay. And then you have distribution and distribution and distribution, right? Kind of looks like a half of a Christmas tree. All right. Now, this is where we're at. Price is right here, 62.86. Month to date anchor VWAP I showed you earlier, right? All right, so right off the bat, we got to talk about the gap, right? So 62.96 is your gap fill, yesterday's lows. That's an important level. That's an important level, okay? Now, we already know. Here's our demand, right? We're bouncing out of it. What else is here? The ultimate balance level of 62.70 with this demand zone. That is your defense. Hold that. You have to have a bias of being long. Okay? You can see that 62.62 level here is support. Okay? Now you have supply right here. So there's a lot of overhead supply here. You have a supply zone here. You have a supply zone here with last week's highs. Okay. Okay. I think we can come up with some scenarios here. Okay. Let's do it. All right. Start with the bull side. All right. So here's price 62.88. Right. Our most traded price of the overnight's right here. Now what I'm going to do to make it easier on the eyes here, we're going to split this out and see the price action for the overnight. Okay, that's just 30-minute bars. Okay, so here we go. Price is here. We know we have a big demand zone here. We know we have a major level 6270. We know we have a gap fill here. So what would I be looking for? If this market drives down, breaks these overnight lows, I know there's demand here and this monster level. Okay, sometimes you bounce off it perfectly and do some higher lows, right? And then you can start to work this off, go up, right? I also know you can rip through it. Now, if we rip through it quick and reclaim it, that's also a long. Okay, acceptance below this is not a long. Okay, acceptance below this is not a long. Now, that's your longs. Okay, obviously you can come right up to the gap fill and fail, but that's in the short side, right? Now, of course, if you take out this supply, you can see the support, the resistance here. You can hold that, maybe reclaim it to go back up to yesterday's highs. Okay, that's what I'm looking for. Now, right here, you notice the most traded price right now, the overnight, right there. You can see there's a high volume node right here. That right there, write it down, 6290, 6290. That's also a pivot level here. All right, so you want to see, even if we come down here and hold this level, it's probably a good thing to go long. Okay, that's what I'm looking for there. All right, now we're looking for a short. What do we have to see? Right, so number one would be a push into gap fill right there. Now, sometimes it's perfect and you just hit it. You get some lower highs and you fail, and see if you can take out the overnight lows. I'd probably target here 6270, that ultimate balance level. If you take this out, retest it, you could fall really mightily. Remember, this is your ultimate defense. Okay, you could also go deep, push up higher into this supply and struggle here and maybe roll over as well. Right, I like the gap fill better because the higher you go back up, the more chance that all these shorts will have to cover. Now, what makes this, that's the end of my analysis pretty much there. I don't really, if we go up here in the day, I'm probably not going to want to short. Okay, just to give you psychology. Okay, this is pretty disappointing if you were in the market yesterday, because if you were long any stocks, right, we opened here, we closed here, you're like, ooh, this is nice. We had nice, the most traded price was up here in the range. Generally, you're going to move higher. Well, now all longs, when the market opens, are going to panic a little bit. Okay, and that's what might cause this gap fill to then go, all right, I'm out, I'm getting out, I'm getting out. We got the pop, and then people dump it. Now, like I said, that's only psychology. I don't know what's going to happen. I have to follow what's going to happen. Okay, moving on to the NASDAQ. Here's a good old NASDAQ here. Okay, remember, NASDAQ's got a nice, little more of a nicer range in a way. All right, so let's look at this profile. Got a nice balanced profile. Okay, it's much more prettier than in the ES. All right, let's look at some levels. All right, so chop zone here. Chop zone. So we know we have the most traded price of the week at 229, right? We're right there right now. This is no surprise that you're stalling there, right? Then you have your demand zone down here with the ultimate level of 22830 and the support right here of around 22850. Okay, most traded price of the overnight is right here. And guess what the Nasdaq's doing? What do you notice? Well, gap fill is here. We're not even gapping down. We're actually inside at the lows yesterday. So Nasdaq right now is structurally stronger, okay, than the ES. ES is down gapping down, and the Nasdaq is back into range, right? Little feather in the cap, little feather in the cap for the Nasdaq. All right, now looking at the levels here, there's a lot of overhead supply here in the Nasdaq. It's just a lot of overhead supply. Okay, so we have, let's just open this up. We do have an important level to talk about. Okay, there's our price action in the overnight. Okay, now we know we have chop zone in here. This is chop suey in here. I don't really want to be involved inside here. I want to be involved outside of here, out or up above here. Okay, so we got a supply zone here. You can see the resistance, this supply zone. You got more supply up here. Now this level right here is your overnight highs and happens to be the most traded price of yesterday. And then you have your top of the range here is your last week's highs. That's been the top of the range. Okay, and we know we have the poor structure down here that if we're weak, we cut through it. All right, so let's get into scenarios and let's end this stream. All right, let's do it. We're going to start with the bull side. Price is here. Okay, price is here. Lifted off this support in the chop zone, right? In the ultimate defense of the Nasdaq. What I want to see, I want to see it drive up into this supply, right? Maybe, look, what I'd like to see is a pullback to this level, 229. Hold, and boom, take out this supply, work up into yesterday's close, and try to take out this confluence high of the overnight highs at 23048. That's the most traded price of yesterday. Okay, that's a really nice trade. Okay, this gets difficult in this area. Now, what could happen is we come all the way down. The only way, maybe, and I'm not in love with it. We come down real quick, whoop, recover, hold that level. Now this could chop in here and end the day that way. That's why I'm not in love with it. But if you do make it out, you could go up a little bit. Okay, I don't really like anything inside here, and down below here, you don't want to find acceptance. Okay, that's all for longs. That's a lot of overhead supply there. Okay, so shorts. Okay, you know you're at yesterday's lows right now. You know this is your ultimate defense. Okay, so what could happen here? Like I said, we can get that push up into this supply. Reject, come back down, test this level. If the market is super weak, okay, you're going to take out this liquidity right there, boom. Take out that support level and test the 22830. That's your monster level. This is where you gauge how weak this market is. Okay, if the market continues to get weak and we start to hold, come up, fail, this is where the rubber meets the road and your single prints. This could just fall all the way down to 22650 very easily. There's no structure here. Okay. You could also drive lower, hold, and maybe get a short to clean this up as well. Like I said, I don't really like being in this area. I'd like to be away from it. Okay. But that's my analysis for today. All right. Hopefully, you guys enjoyed that. Okay. Please smash that like button if you did. All right. Never seen Mango in here before, so welcome, Mango. All right. And as always, I do this every morning. Today was a little more long-winded than usual. All right. But join me every morning. I give you the market story, give you the market news, the economic calendar, the leaders and the laggards, and generally the overall story. Have a cup of coffee, tea, water, whatever you want to have. And even if you're not involved in trading, you can hear what's moving markets from me for the first at least 15 minutes. Okay? And then if you are into trading, then of course I give you loads of TA. technical analysis. Okay, so hopefully you enjoy this. All right, I enjoy giving it my analysis. Okay, feel there's golden nuggets here to be taken. And right now, remember, when this market opens, right? When this market opens, stick with me. All right, stick with me. Stick with me because I'll be on my Discord today. I'm probably gonna go live. Probably gonna go live. Okay, and you'll get live commentary from me. Okay, right in here, I update from the morning how everything's looking. Right, give you my trades in the trades channel. Okay, but my goal is not to teach you to trade like me. Okay, it's to basically show everybody how the market works. And like I said, use me as your indicator. Use me as your indicator. Okay, and of course, where you got to go? Come Fluids Trading, my Discord. All right, join the community. All right, get live updates with me, live commentary, and do what you want with what I say. All right, remember, scalpers can still use me, right? But it's a little less of the stuff I look at because you're looking for small moves. But if you're like an intraday swing trader like myself, it's very important to know what the market's capable of. All right, and you'll get that from me. All right, so if I don't see you in my room live today, I will see you guys on Monday. All right, everybody have a great weekend, and hopefully I see you in the room. All right, everybody, take it easy.